Hi and Assalamualaikum. This is our group presentation for Financial Accounting and Reporting 4. This assignment is divided into two parts, which are Part A and Part B. Part A is segment reporting for MFRS 8 and Part B is interim reporting for MFRS 134. Before that, let me introduce our group member. The first one is Nurhanani binti SAMSUL BAHARIN. The second one is HAFIZAH binti AHMAD. The third one is SITI AFIFAH binti ROZY. And the last one is me, Nurhanani binti Daud.
YTL Corporation BERHAD is an integrated infrastructure developer with extensive operation in countries including Malaysia, the United Kingdom, Singapore, Indonesia, Australia, Japan, Jordan and China. The core business of the YTL group comprise utilities, construction contracting, cement and manufacturing, property development and investment, hotel development and management, e-commerce initiative and internet-based education solution and service. YTL Corporation is among the largest company listed on Bursa Malaysia and is a component of the FTSE Bursa Malaysia Mid 70 Index. YTL Corporation has also had a secondary listing on the Tokyo Stock Exchange since 1996 and was the first non-Japanese Asian company to list on the Tokyo Exchange. The YTL Group is committed to producing world-class products and services at competitive price. This corporate philosophy has enabled the YTL Group to build up a growing customer base of more than 12 million customers globally over the last 30 years.
So I will explain regarding management approach of YTL Corporation BERHAD. There is three approaches that we will explain, but for my part, I will explain about factors to consider having a segment reporting. Under MFRS 8, Chief Operating Decision Maker needs to consider some factor to having a reporting segment. The factor is, first, nature of product or service. Second is nature of production process. Third is type or class of customer for the product or service. And the last factor is method used to distribute the product and services. Based on YTL Corporation BERHAD 2020 annual report, for segment reporting, operating segments are reported in a manner consistent with the internal reporting provided to the Chief Operating Decision Maker, who is responsible for allocating resource and assessing performance of the operating segment.
Type of segment. For management purpose, the YTL Corporation is core into a few business units and operating segment as follows. First, construction. Second, information technology and e-commerce related business. Third, cement manufacturing and trading. Fourth, utilities and all other segment, which is hotel, operation, management service and others, property investment and development. Okay, first, construction, which is activities undertaken by its wholly owned subsidiaries, Syarikat Pembinaan Yoh Tiong Le Sdn Bhd, which is principally involved in the construction of large-scale infrastructure, including railway line, highway and power plant, as well as commercial and residential properties. Second, IT and e-commerce related business, which is also undertaken by its wholly owned subsidiaries, YTL eSolution BERHAD and its subsidiaries YTL eSolution Group, which is undertake technology incubation investment as well as the provision of IT consultancy service and digital media content. Third, cement manufacturing and trading, which is activity are undertaken through the YTL Cement BERHAD group of company operating in Malaysia, Singapore, Vietnam, China and Myanmar. Fourth, utilities, which is comprise the activities such as power generation that contracted with YTL Power Group, Tanjung Jati Power, APCO, multi-utilities business that interest in YTL's Power Seraya Singapore, water and sewerage, which is interest in Visit Water, and telecommunication business, which is on separated the YES nationwide 4G LTE wireless broadband platform. And the last one, all other segment, which is carry out investment holding activity in hotel operation, property investment and development, and other services of the YTL group that including operation and maintenance activities for power station, cement plant and other related business.
Management has determined the operating segments based on the reports reviewed by the Chief Operating Decision Maker (CODM) that are used to make strategic decisions. Operating segments are reported in a manner consistent with the internal reporting provided to the CODM, who is responsible for allocating resources and assessing performance of the operating segment. The CODM receives separate reports for power generation contracted, multi-utilities business, machine, water and sewerage, and mobile broadband network. They have been aggregated into one reportable segment, which is utilities, as they have similar economic characteristics, and those detailed segments information disclosed in YTL Power International BERHAD's annual report, which available for public use. The CODM considers the business from both a geographic and business segment perspective. Geographically, management manages and monitors the business in three primary geographic areas: Malaysia, United Kingdom, and Singapore. According to MFRS 8, operating segment requires an entity shall report its information separately with regards to the operating segment only if it passed the quantitative threshold test of 10% threshold test and 75% test rule. To identify the qualification of reportable operating segment, 10% threshold test consists of three tests that are revenue, profit or loss, and total asset basis, in which it must satisfy 10% or more. After determination of reportable segments, the entity must do 75% test rule, in which the total external revenue of the reportable segment must be at least 75% of the total revenue of the entity. If this operating segment does not meet any of the quantitative threshold tests, 10% threshold test, it will be not qualified to be separately disclosed in the financial statement and must be combined together as and disclosed as all other segments category. There are only three reportable segments, which is construction, cement, manufacturing and trading, and utilities. Since the others does not meet 10% threshold test, it will be combined together and disclosed as all other segments category in the new segmental report after this. Therefore, after adjusting the segmental report, the number of reportable segments increased to 4, while there is only one non-reportable segment. After determining the reportable segments, the entity should ensure that the total external revenue attributed to those reportable segments is at least 75% of the entity's total revenue.
For now, I will explain about the advantages of segment reporting. The first one is transparency and better insight. It is better evaluate the sustainability and growth of the company. For company like YTL Corporation BERHAD that operate in different categories, segment reporting can reveal which areas are profitable and which are drained on the bottom line. And it also can monitor performance of the management. Literally, it will keep managers from hiding unprofitable ventures. The second advantage is better predictor of profitability. In other words, it will enable users of financial statements to predict the future profitability of an organization. Segment reporting also allows stakeholders to get a better sense of the fluctuations that might affect overall numbers. It is It is designed to help investors to make prediction on profitability with better understand the business and its potential cash flow. The third advantages is reduced cost of capital, risk in investment lower, and better analysis towards risk and return. The risk for investment in equity for a company that discloses complete information is lower than the investment in equity of a company that withhold information. Investors and lenders analyze information relating to a business enterprise to evaluate the risk and return associated with an investment or lending alternative. Next, I will explain about the disadvantages of segment reporting. The first one is data manipulation. Information is presented by not following the right regulation. Managers can also cherry-pick metrics to send the desired message to stakeholders. Segment reporting lends itself to data manipulation if the information is reported in the management style. The second disadvantage is problem of misinterpretation. In case of inclusion of inter-segment transfers of sale, it will lead to misinterpretation by users group. For example, if the segment sales figures are larger than the consolidated sales figures. And the third disadvantage is base of segmentation. Every base of segmentation may create segment differently. For example, on the basis of organizational division, industry, market, and product. It is difficult to determine the base since each of that has its own limitation and own problem.
YTL Corporation had prepared its interim financial report by following all the requirement criteria stated in paragraph 9.22 of the main market listing requirements of Bursa Malaysia Securities BERHAD and complies with the requirement needed in MFRS 134 interim reporting and other MFRS issued by the Malaysian Accounting Standards Board MASB. This interim report will be presented together with the group's audited annual financial statements for the financial year ended 30 June 2020. 1. MFRS 134 interim financial reporting adopts the discrete method as a basis for preparation of the interim report. 2. Each interim period should be considered as a separate accounting period from the annual cycle. 3. Interim reports are meant to predict and describe the financial position and financial performance for the discrete period, which may be a segment of the annual period. 4. Revenue and expenses items be measured and recognized in the same way that annual financial statements are prepared as per the discrete method.
For now, I would like to explain about the accounting policies used in preparing the interim report. One of it is MFRS 116, which is property, plant and equipment. Property, plant and equipment except for certain freehold land and buildings is stated at cost less accumulated depreciation and accumulated impairment loss in accordance with MFRS 116, property, plant and equipment. The depreciation on all other property, plant and equipment is calculated on the straight line basis at rates required to write off the cost of property, plant and equipment over their estimated useful life. We can have a look at the principal annual rates of depreciation used are as follows. For building, it is between 1 until 10%. For leasehold land, it is 1 until 3%. For infrastructure and site facilities, it is between 0.9% until 20%. For plant and machinery, it is between 4 and 20%. For furniture, fixtures and equipment, it is between 10 to 50%. For vehicles, it is between 10 to 33 1/3%, and for the telecommunication equipment, it is between 4 to 20%.
The second policies used in preparing interim report is MFRS 123, which is borrowing costs. For YTL Corporation BERHAD, borrowing costs are capitalized as for part of the cost of qualifying asset if they are directly attributed to the acquisition, construction, or production of the asset. Borrowing costs are capitalized until the assets are substantially complete for their intended use or sale. All other borrowing costs are recognized in the profit or loss in the period they are incurred. Borrowing costs consist of interest and other costs that are grouped and the company incurred in connection with the borrowing of funds.
Okay, for now, I want to explain more about type of report for YTL Corporation BERHAD. But before that, I would like to explain a little bit about the interim statement. Interim statements are financial reports produced by firms covering a period less than 1 year. It is used to convey performance of a company before the end of normal full-year financial reporting cycles. It can increase communication between the companies and the public. It also can provide investors with up-to-date information between annual reporting period. It include statement of profit or loss or other comprehensive income, statement of financial position, statement of change in equity, statement of cash flow. It is issued 4 times a year, which means every quarter is equal to 3 months. Next, the financial year period is from 1st July 2019 until 30 June 2020.
YTL Corporation BERHAD report the financial statement every 3 months, which means quarterly. The first quarter is from July to September, second quarter is October to December, third quarter is January to March, and fourth quarter is April to June. Shown in the slide is the period of current and comparative of each statement prepared by the company. As we know earlier, YTL Corporation BERHAD prepared their financial statement quarterly, so we had choose quarter 4 for the current interim report. For the income statement, the report is prepared from the 1st April 2020 until 30th June 2020, while the comparative is the same period for the immediate preceding year. Next is statement of comprehensive income. The current interim is at 1st April 2020 until 30th June 2020 and comparative at 1st April 2019 until 30th June 2019. Next is statement of financial position. The current interim is at 30th June 2020 and comparative is at 30th June 2019. Next is statement of changes in equity. The current interim is at 1st July 2019 until 30th June 2020 and the comparative is at 1st July 2018 until 30th June 2019. Next statement is statement of cash flow. The current interim is at 1st July 2019 until 30th June 2020 and the comparative is at 1st July 2018 until 30th June 2019.
As you can see, that was adjustment 1. The situation is the cost of inventory as at 31 June 2020 is amount Rm 2,184 million, while the net releasable value of the inventory is Rm 1,800 million as at 31 June 2020. To extract from financial position for inventory, you can see at the table on the screen. To get a net amount, you need to choose the lower between the cost and the net releasable value. After calculate, the net amount is Rm 1,800 million, which is the amount of the releasable value. Okay, now we look at the adjustment 2. The situation is as at 31 March 2019, the account receivable amounted to Rm 56,000. The company estimated that the amount will only be 90% collectible by year's end. However, the estimated collectible amount has risen to 95% as at 31 June 2020. Then we can see extract from financial position for receivable in the table at the screen. To get net amount of trade receivable, the gross amount from to date need to multiply with collection rate. After calculated, the reporting date at 31 March 2019 get Rm 50,400, which is Rm 56,000 multiplied with 90%. And then for reporting date 31 June 2020, the net amount is Rm 53,200, which is Rm 56,000 multiplied with 95%.